On average, it takes 22 days for the market to bottom during geopolitical events like the Israel-Hamas conflict. We are now at day 10 or day 14 depending on how it's measured. Are we in for more pain? So let's discuss. My name is Den Slim and welcome to another episode of Monday Market Outlook. So two major news events moved the markets last week. First up, we have the Israel-Hamas war, which will enter its third week this week, pushing our two commodities further up. First, we have WTI crude prices a bit up at 88.28. Now look at how volatile oil prices were last week. In just one day, we saw oil prices jump from below 86 to above 89 in just one day. So far, it has stopped after the knee-jerk reaction. It's trending upwards and it is now at 88.28. Gold, meanwhile, continues to enjoy a rally as investors flock to this safe haven asset. It encountered a sell-off when it entered into this demand zone here. So we will see if next week it will be able to break through this demand zone and go up to around 2050. Now, looking back at our chart here, we mentioned that it takes 22.5 days on average for the markets to bottom during major geopolitical events. I'm not sure if the 22.5 days here refers to 22.5 trading days or actual days, but assuming that it refers to actual days, we may still have 1 week to go before the market finds its bottom. And if this refers to trading days, then we have 2 more weeks to see where the market would settle. But so far, the S&P 500 suffered its worst week since September, down 2.36% this week to end at 422. Almost at our options put wall at 420. If we break support at 420, the next level of support sits at 4,100, where hopefully this is going to be the bottom. So this is going to be a zone to watch out for in the coming weeks. The other news that caused trouble in the markets were the economic numbers last week. Retail sales data that came out last week was hotter than expected. Look at core retail sales, 0.6 compared to 0.2. Retail control month-on-month, 0.6 compared to 0.1. While we got a slew of comment from Fed chairs, especially Jay Powell, reiterating the rate pause, rates higher for longer narrative, the market strongly disagreed with the Fed, with bond yields rising to new highs. If we look at the Fed probabilities, we are actually seeing the odds of a rate increase going down. If we look at the high column here, all of these numbers a week before, they were at the 40s or high 30s, but they are now down to 28%, 23%, with the possibility of a rate cut as early as May or June next year. But the bond market strongly disagreed with the Fed, betting that the higher retail numbers and the expected higher GDP numbers will force the Fed into more rate hike as the 20, 30, and 10-year yields soar to new highs this week. So along with the uncertainties of the Israel conflict and the rising yields, look at the S&P 500. It continued its strong downward trajectory, and as you can see, the market has an inverse relationship with bond yields. See, as bond yields spike here, the market went down. As bond yields go down, the market started to go up. And as the bond yields continued to go up strongly for the past 3 days, the market continued its sell-off. Now, look at what's happening to the 2-year yields. It's going down. So let's look at the yield numbers here. If you notice, the 2-year yields here is higher than the 10-year yields. So you may ask, how come if you invest for 2 years, you get a higher return compared to investing 10 years? Because aren't you supposed to be rewarded if you stay longer? Now, if you've been hearing the term yield curve inversion, this is what it means. Now, it means that the short-term yields are higher than the long-term yields. So basically, what this is saying is that moving forward in the future, the market is expecting the future to be worse than what it is now. So which is why the yields are lower, because things are going to be worse in the future, which is why this has been a reliable indicator of a recession. Now, the yield curve has been inverted for 16 months already when it went above 1%. year around July. If this predicts a recession, when will the recession happen? They say it will happen when the yield curve disinverts. This happens when the yield curve, the 2-year and the 10-year, goes below 1%. At 1%, the 2-year and the 10-year yields are equal. Below that, the 10-year yields become higher. So if the 10-year yields become higher, that means that we are now in a worse situation than we were before, and things will get better in the future. Right? As we reach this inversion, we may start seeing economic numbers going down from their usual surprises this year. Could we be in for a difficult 2024? So remember, as we approach 2024, this may already go down below 1%, and we may start seeing worse economic numbers. Back home, let's look at how all of these foreign factors come into play. Because why are we discussing the S&P 500 when this is a Philippine stock market channel? Now look at what happened last week. On Friday, the S&P 500 sold off. What happened when we opened on Monday? We sold off. On Monday evening, when the US market opened, it opened to good news because the planned ground invasion of Israel was postponed to give evacuees more time. So the US markets went up to some good news. What happened on Tuesday morning when the Philippine market opens, we also went up. Now Tuesday evening, the US markets opened to surprise retail numbers, knee-jerk reaction here before it stabilized. Same thing when we open up on Wednesday. Now Wednesday evening, there was a bomb explosion in a hospital in Gaza where the two sides started pointing fingers. Meanwhile, yields continued to go up, so this caused a sell-off in the markets. Wednesday, Thursday, Friday. Wednesday, sell-off in the S&P 500. Thursday, sell-off. Thursday evening, the US markets was down. Friday, we were down. Friday evening, the US market was down. What do you think will happen to the PSEi when it opens on Monday? Let's look at the charts. The PSEi settled right at its support zone here, closing at 61.42. The market has been indecisive in the previous week, going nowhere before it gave us a clear indication of where it wanted to go, which is, down, unfortunately. So we are at this critical level where either we can have a technical bounce if this support holds, or we succumb to foreign pressure and head towards 6,000. So a lot will depend on how the situation in Israel unfolds, which is why during these events, we typically see a sell-off on Friday because things may escalate over the weekend when the market is closed. So investors are engaged in a risk-off mode. Now, if we get some good news over the weekend, we could negate the negative S&P 500 drawdown last Friday and have a technical bounce when the PSEi opens this Monday. But for now, and in our past episodes, we haven't been buying any stocks. So it's best to stay in the sidelines. There's really nothing notable yet. Let's take a quick look at SEC. After its ex-date last Friday, it had the expected drawdown going down 11.4%. Now, same thing that happened last time it had its dividend. Next dividend will be on April next year. So wait for a bottoming process like this to happen before slowly going in, slowly accumulating for next year. Will SEC go back to 27? It's possible, especially that it might be doubtful for SEC to give the same dividend yield next year. So this year, SEC gave 350. So that's 7 pesos, which is a whopping, 20+% dividend. Maybe next year, they can only give, 4 pesos, 5 pesos dividend for the whole year. At 5 pesos, the dividend is at 10-12%, which is, guys, it's not going to be better than 20%. But 10%, 12% yield, that's not bad. Now, similarly, DMC will have its ex-date on Monday. So, also expect a sell-off. There's already a big sell-off before that ex-date. See? So, expect DMC to go down when it opens on Monday. Let's go back to the PSEi, right? If we are expecting this to go down, PSEi, we are at critical support. DMC holds a 4.7 weight on the index. Could this mean that we breach 6,142 on Monday? We'll see. So let's take a look at some select earnings So we have Figaro Coffee coming in with great net income sales, doubling same-store sales growth, 6% year-on-year. No? For businesses like this, you want to take a look at same-store sales growth. So it's not enough that these businesses open new stores. No? You want to make sure that the new stores that Figaro opens do not result into the existing stores suffering. So you don't want customers from the existing stores simply moving on to the new stores. So you want to see same-store sales growth also growing. But even so, investors were not impressed as we saw a 15% drop in Figaro Coffee shares primarily because of its possible dilution, given that they are planning to sell up to 20% of outstanding common shares. A dilution of shares means that, for example, there are 5 of you and you set up a business, 5 of you. So you each have 20% share in the company, 20%. So imagine there are going to be 3 new investors coming in. So there's now 8 of you. So from a 20% share, now there's 8 of you, now your share becomes 12.5%. That's not good, right? As expected, during the start of this year, we said banks are going to benefit from higher net interest margins, and so far, banks have performed according to this expectation, with BPI opening up the earnings season with a record profit of 38.6 billion. Now, if you look closely at these numbers, the net interest margin growth on a quarter-on-quarter basis are actually slowing down. There's still growth, but it's slowing down, which again, we've been saying that if rates have paused for the Philippines right now, we may see banks' stocks already topping out. So, going into 2024, we could possibly see us rotating out of the banks to somewhere else. Let's move on to US earnings. Tesla stocks opened up blockbuster earnings last week with disappointing outlook. So the stock went down hard, 16% in the last 3 trading days. But on the other hand, Netflix up 16% as we saw the results of their password sharing crackdown and the introduction of their ad-supported tier. Investors were worried at the start on how these changes will affect subscriber growth, and so far they have proven to be quite effective. Now, why are we talking about Tesla and Netflix? No, it's important to track these companies because right now the S&P 500 is so dependent on only these 7 stocks. They are called the Magnificent Seven. So we have Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, and Tesla. See how the S&P 500 performed without these 7 stocks. All other stocks, 493 stocks on the S&P 500 are now near their critical lows. Well, actually, they're below their critical lows. So, however these 7 stocks move in the next few days, especially entering into earnings, will also come into play in dictating the direction of the S&P 500. That and more important economic data coming in next week as we see the services PMI and the GDP numbers coming in. The forecast is 4.1%. I mean, what recession? 4.1%. If it's lower than 4.1%, then we're good. But if it's higher than 4.1%, then all hell might break loose in the markets. And of course, on Friday, the Fed's favorite inflation indicator, the core PSEi numbers, forecasted at 0.3. So let's look at the S&P 500 chart. The S&P 500 broke through this demand zone here and also broke through this put wall at 425 to end the week at 422. Same situation as investors entered into risk-off mode for the weekend. No? The news will determine if we breach 420 here and find a bottom at the 4,100 level. So we'll see. Will it take a week to reach this bottom? Is this going to be the bottom, or is this going to be the bottom in the next 2 weeks? So we will see. On a last note, last Friday, what I heard was that the short selling for the PSEi has been postponed to November 6. And even November 6, I doubt if it's going to push through there because there's still a lot of things to be ironed out with how this is all going to happen. So maybe next week we will do a primer on short selling, what it is, and what we know so far on the rules governing short selling here in the PSEi. But for now, please like this video if you found the information useful. Please subscribe to the channel for more updates. And as usual, good luck on your trades. Please manage your risks accordingly, and I'll see you again next week. Bye-bye.